Hi friends, 4 months back I created a video covering AI stocks and many of you commented saying that Rahul, can you make part 2 of this AI stocks? So in this video I am going to talk about 3 amazing AI stocks for 2024 and more importantly what makes them amazing for year 2024. With that, let's get this video started. So the first stock I want to talk about is Mphasis Limited. Have a look at my screen and you will see that in the last 1 year, this stock has given close to 11% returns. Now, just to put this in context, if you look at some other AI stocks, so for example, Zensar is another AI stock in the last 1 year has given a very good run up and close to 125% returns. Have a look at another AI stock, Persistent System Limited, last 1 year, 51% returns. Tata Elxsi, another very good AI stock, has given in the last 1 year 20% returns. So by looking at these 3 AI stocks, we can see that AI stocks in the year 2023 have given really good returns. But if we compare this with Mphasis Limited, Mphasis has only given 11% returns, which is a very average return, right? Now the question is, why is it so that Mphasis has given less returns than other AI stocks? So we are going to answer that very fundamental question. That is part 1. But more importantly, if I show you the last 1 month's return of Mphasis Limited, you will see that in the last 1 month, the stock has gone up by 7%. So the majority, like 70% of these 11% returns have just come up in the last 1 month, meaning the remaining 11 months, the stock has given absolutely flattish returns. 4% returns is what it has given. And in the last month, since the stock is picking up, the question that we need to answer is why the stock is picking up in the last 1 month. Is it starting a new bull run in the stock or not? And then is it going to give us good returns in the coming years? Because there is something fundamental that is changing with Mphasis Limited stock. That is what I want to address. So 2 questions that we want to address. Why in the last 1 year the Mphasis returns have been muted or average returns, while in the last 1 month the stock is picking? Will it continue or not? These are the 2 questions that we need to answer. So for that, what we are going to do is we are going to go and have a look at their last quarterly results, and you will see page number 11 of their presentation. You will see that their America's revenues have fallen down. In fact, if you compare Q2 of last year and Q2 of this year, their revenues have come down from $450 million to 398. So there has been a degrowth, and more importantly, majority of their revenues are coming from America's geography. So that has come down from $362 million to $316 million. So a significant degrowth has happened from America's perspective. Now, if you look at the commentary from their management, page number 7, they're saying that the US business has declined mainly because of the macro overhang in the banking sector. I will explain to you that factor in a minute and why this condition may reverse in 2024. We'll talk about it in a second. But more importantly, if we just come down to page number 12, you will see that banking and financial services, which is the major portion of the company's revenue, have come down from close to $235 million to $188 million. So a very big degrowth has happened in their banking sector revenues. That is why the overall revenues are down, and that is what we need to understand. So if you go to page number 8 here, again they're talking about the BFS sector being declining by close to 20%, mainly because of the mortgage business. So 2 things here we have learned. That US geography is declining from a revenues perspective, as well as their BFSI, the mortgage business that in particular has been declining. Why that is happening in the last 1 year is what we need to understand. And a very simple explanation is that if you look at the US Fed rate in the last 1 year, it used to be at around 3% here and it has gone up to 5.33%. Let's just understand this fundamental macro that is impacting Mphasis share prices as well as the revenues in last 1 year. Simple explanation is that because the Fed rate is very high, what happens because of that is the borrowing in the economy, in the US economy, has become costly because the rates are very high. When that happens, what happens is the mortgage business is the one that gets maximum impacted. Banks will find it hard to find mortgage customers, and customers will not be borrowing because the interest rates are all-time high. Now, will this trend reverse in 2024? In my view, yes, it is likely to reverse, because if you look at 4th of December, this commentary came that Fed rates now are at all-time peak. Meaning that the chances of Fed rate going up is very thin now. Like 1% chances is that the Fed rate is going to go up. In fact, next year what is going to happen is that the Fed rates, which are now at all-time high, 5.33% right now, will start to come down throughout the year in 2024. Now what that will do is that will release a lot of pressure in the mortgage industry, in the banking sector within US. And what that will do is that the revenue declines that we have seen for companies like Mphasis Limited, which are heavily dependent on US BFSI sector, that is going to go up in my view because of the softening of the interest rate. So the key point here is that next year in 2024, if the macro conditions become conducive for Mphasis Limited, their revenues are going to go up, and because of which the share prices are going to give hopefully better returns than what it has given in this year. Let's now try to understand that why in the last 1 month Mphasis share price has gone up by close to 7%. For that, page number 8 of their earnings presentation call, and you will see that the total deal wins that they have done is $961 million. Now, what is this number? I will explain to you in a sec, but you will see 29% of this $961 million of deal is coming from generative AI sector. Mphasis.ai, one of the companies that had created a AI business unit. It's not a center of excellence. It's not a POC things that are going on. It is actually a proper business unit. People who are in IT will easily understand what is the significance of having a separate BU or business unit in IT domain, right? So from that perspective, there seems to be a lot of focus in the AI segment when it comes to companies' growth. Also, if you put this in some context, you will see the Q2 of last year versus Q2 of this year, their pipeline or the deal wins have gone up by close to 33%. From a diversification perspective, because this company, one of the biggest risks with this company is that it is heavily reliant on the BFSI sector, banking, financial sector. But if you see in non-BFS segment here, it has gone up by 42% from a deals perspective in this quarter, right? Also from top 10 clients perspective, they are trying to reduce the dependency on the top 10 clients, and the deal quantity has gone up by 33%, right? Now you will understand this from this perspective as well, that if you look at the last few half years that has gone by, this half year of 2024, the company has got $961 million of deals sealed. That means this is the biggest quarter in terms of the deals that they have signed. Now people who are in IT, they will understand that when you sign a deal, it takes minimum 12 months to 24 months to realize those revenues, right? That is why you see in H1 last year, 604 was the deals that they signed, $604 million. That is causing the revenue degrowth right now because it has been realizing right now. But if you look at this half year now, $961 million of deals that they have signed is going to get added into their revenue in the next 12 to 18 months. So that is why precisely the share prices in the last 1 month has gone up, because these results came out just 1 month before. And when the people, investors, see these kind of results, what they are doing is they are buying this stock in anticipation that macro condition is going to improve in next year, as well as the total deal size is looking really good and the stock price is likely to appreciate next year. Now, this is not a recommendation for you to go and invest in this company. Please do a thorough fundamental analysis. I am not really doing the deep dive analysis of this company. I am presenting you 2 big points that you need to understand for you to do some further research. So please don't take this as a recommendation. Also, if you're liking this type of analysis, then you can consider subscribing to my YouTube member community, because I post in-depth exclusive analysis for my community members. Let's move to stock number 2, which is Happiest Minds Limited. So I don't know how many of you know, I used to work for a company called Mindtree. In fact, Mindtree was my first company and I worked for Mindtree for close to 10 years. And at that time, Ashok Soota used to be our chairman. So I worked under his leadership. Because of some problems between the founders, Ashok left the company and he started Happiest Minds Limited. The IPO of Happiest Minds came somewhere around in September 2020, I think, if I remember that correctly. And at that time, the price was close to, I think if you look at the chart here, maybe 300 rupees level. And I wanted to buy this stock, but it never gave me a chance. It went up, and you see it went up to like 1200, 1300 level. It has been softening from that time onwards. And in fact, if you look at the last 1 year, the stock has given close to minus 15% return. So it has softened a lot from its all-time high. And the question for us is, what is causing this softness in the stock? Why the stock is falling? Unless we understand whether it's a good correction or bad correction, we are not likely to take any positions. So let me quickly share a couple of points. I will not go into a lot of details, but if I come and have a look at their quarterly results, you will see that in the last quarter, they have done 14% of revenue growth year-on-year basis. and 4% quarter on quarter basis, right? If you look at their EBITDA margin, they are also grown by 11%. So one of the important things that you need to understand in IT companies, whenever you're analyzing, have a look at the EBITDA margin, because that is a very important metric that will tell you whether this company is a better company than other IT companies or not. So Happiest Minds EBITDA margin traditionally has been around 24% to 26%. That makes it a very, very good IT company. Go and have a look at other IT companies and you will struggle to see this level of EBITDA margin in IT companies, right? So EBITDA margin is very, very healthy, 24 to 26%. But if you look at the PAT here, although the revenues have gone up by 14% year on year basis, but profit after tax has actually come down by close to 1.6%. So the revenue has shown the positive growth, but the PAT has come down slightly. Now, why this is happening? If you look at the commentary on page number 15 of their earnings transcript, you will see that what their management is saying is that 8 crore to 9 crores of intangible write-offs is what they had to consider because of acquisitions they did in past. So SMI, a company that they acquired, PGS, a company that acquired, and some of the purchase consideration of these companies have actually gone into intangibles in their balance sheet, and that is dragging the profitability down. One of the factors, not the entire story here, but all in all, I don't think we should worry a lot about why the profit margins have come down slightly, right? As long as the company continues to grow their revenues, their EBITDA margins are looking healthy. Accounting wise, there may be some adjustments. We will see that, and one quarter here and there doesn't really make a big difference, right? But the second big red flag that we need to consider is on page number 4, where they're talking about their revenue growth guidance, right? So earlier the company was giving a revenue growth guidance of 25% in quarter 1, but now they're revising it to only 12% on organic basis. This is very, very important factor because this will tell us whether the Q3 and Q4 of the upcoming year is going to give a better revenue growth or not. So what company is saying is target was 25%. They are now reducing it to 12% from organic basis. So they are being sure about how much of organic growth the company is going to get, but the remaining 13% they are not sure now. Why? Because apparently if you read page number 7, there was a large acquisition that the company was planning, right now that is delayed. If they would have done the acquisition by now, then the revenues from that acquisition would have got added into their overall revenues. That would have given them inorganic growth of close to 13%, right? Now management is saying is that because of that large acquisition being delayed, that they are not going to hit that 25% number, right? And also what they're saying is that that large acquisition is not off the table. That will happen, but potentially not right now, or the revenues from that stream is not going to add it into this year. So from a future perspective, the revenue growth is going to come inorganically as well, but not in Q3 potentially, may not be in Q4 as well, right? So from a Q3 and Q4 perspective, we don't expect a lot of revenue growth coming up. Now, important factor here is that the market, the investors have read this. They have already baked this into their calculations, meaning that right now the share prices that we are seeing. So if I go back to the share prices, this softening that you see in the last few weeks, because of this reason, has already been baked into the share price in my view, right? That is why if you look at the share price movement, you see it is sort of remain at 800 level, 830 level, because market now understands that the revenue growth in Q3 and Q4 is not likely to be high. And the last point I want to make about Happiest Minds is have a look at their page number 4. Ashok is talking about they are creating a new business unit called Generative AI. And they're also merging their product engineering services and digital business services. One of the two main business units, they are merging into one, and they're creating Generative AI as a separate business unit. What this is going to do in the next few weeks is that their top management is going to be looking unsettled a little bit because there is a reorg happening here, and that will take some focus away in terms of the customer interactions, revenue growth and all that. And when that happens, typically you will see a hit in revenues or profitabilities in a short term, right? Now, that doesn't mean that they are not setting up themselves for the future growth. Creating a separate generative AI unit is a very, very good move from a long-term perspective. So I think they're setting up themselves for the next 2 to 3 years of growth, which is a good thing from my perspective. So all in all, what I would say about Happiest Minds Limited is that in my view, the stock has seen a good level of corrections. It might see some correction in the next few weeks, but it is almost touching the bottom. And people who want to take some positions, they should look at investing in this company in 2 or 3 chunks over the next 3 to 4 months, because you never know, the stock might still fall, but hopefully in the next 2 to 3 years the stock is going to go back up and is likely to give us good returns because they're setting themselves up for the next 2 to 3 years of growth. Again, not a stock recommendation, and I've anyways not done the full fundamental analysis here. I've just shared some important facts for you to consider in your research. Please do a full research and then take the decision according to your research. So far, if you're liking this video, I request you to press the like button so that more and more people can watch these kind of videos and understand the fundamental analysis, right? With that, let's move to stock number 3, which is Intellect Design Arena Limited. And I've talked about this stock in my previous video. So if you have not watched it, please go ahead and watch it. You will understand the ABC of this particular company and you will understand why I keep talking about this company. Okay, now coming back, last 1 year, the stock has given close to 62% return. Last 1 month, the stock has gone up by close to 13%. It's a growth stock. And now let me share a few good updates from the last few months from the time I created the last video. So if you look at the recent quarterly results, you will see that the company's revenues have gone up to 621 crores as compared to 529 crores last year. So year on year basis, it has gone up. But more importantly, if you see the EBITDA percentage, I talked about this in my previous segment of this video that 24 to 26% of EBITDA margins Happiest Minds was giving us, which is leading in the industry if you understand the IT world. Have a look at here, this company Intellect Design Arena has given now rather than 16% last year, it has now moved up to 20% of the EBITDA margin. Please understand, Intellect Design Arena, some of their revenues also come from licensing business, meaning that there is a very little cost that they need to do, but they sell more and more license that their EBITDA margins is going to go up. So it has gone up to 20% for a product company like them. 20% of EBITDA margin is very, very good margin. And they have come to this margin now in the last 1 year, meaning that the company is doing really, really well from that perspective, right? Also, if you move to the second part of the revenue growth here, you will see that they have gone to the funnel size of 7,520 crores in Q2 of 24. It has consistently been growing, right? Also, if you look at the average deal size, that matters a lot in the IT world. You will see that it has gone from 43 to 53. All in all, in terms of the revenues growth in the last few quarters, the pipeline or the future growth, the company is looking really, really good from that perspective. But one of the biggest problem I talked about this company in my previous video was that they are not able to sell their product or market their product at a speed that I would want them to do, right? And interestingly, if you look at page number 3 of their earnings presentation, recent one, you will see that they have doubled their marketing activity as if they were just listening to me last quarter, because they have literally increased their marketing activities in the last 6 months, having more than 700 meetings, 20 events. So I think all in all, to me, company does recognize that they need to market their products because they have got really solid products. Again, I covered all of that in my previous video. I'm not going to repeat it. Please go ahead and watch that. You will understand all of that, right? Another significant update that I want to share is page number 5, that they have done a partnership with Microsoft and they are launching their IGTB product on the cloud with Microsoft. And they have already showcased close to 50 plus AI use cases in the banking sector. This is phenomenal from a marketing perspective, and also launching these AI use cases are excellent from company's growth perspective. Because if you read page number 12 of their earnings presentation, Rahul Jain, their CEO, is talking about 15 to 20% of cost saving is one of their client is talking about because of using the AI use cases that this company has generated. The growth because of AI is going to be phenomenal, as all of us understand. And what Intellect Design Arena has done is that it has made a big difference into banking sector already. And this is leading that charge from banking sector perspective. So this is a very, very quality stock. Just a big disclaimer, Rahul Jain sharing my surname doesn't mean that he's my relative or I know him, because people create theories, right? Whenever I talk about some stocks in positive language, then people say that, why are you promoting this product? I'm not promoting any stocks, any specific mutual funds or any specific insurance policies. Let's be really, really clear. All I am doing is sharing you my view, my analysis in a very unbiased way. And I genuinely believe that Intellect Design Arena is a fundamentally good company. Please go ahead and watch my previous video. You will understand why I am saying that. Again, not a recommendation for anybody to invest. Please do a thorough fundamental and technical analysis. And if you want to learn how I do a lot of fundamental analysis, you can consider subscribing to my member community on YouTube, because I share a lot of fundamental analysis that you will find very, very easy to read. and then you do your analysis. So let me know in the comments if you would like me to analyze any particular stocks. I will look at some of those comments, and if I get the maximum comments on a one particular stock, then I would consider doing a full video on that particular stock. I hope you enjoyed this video, and if you did, just like the video. I will see you in my next video. Until then, keep rocking.